What's going on YouTube? Happy Monday. I hope you all had an amazing long weekend. I know I absolutely enjoyed the time off of work, but now we're back to the charts. So in today's video, we are going to be breaking down the technical analysis for AMC. We're also going to be breaking down the options flow using unusual whales. And last but not least, taking a look at some large institutional buy orders. But without further ado, we're going to roll right into the intro and then hop into the technical analysis. And we're back. All right, guys. So as you know, I barely posted this weekend, which is very unlike me, but I really spent some time digging into the Wyckoff accumulation and distribution method. And I do have to say it is absolutely interesting, the theory behind all of it, the schematics behind all of it. And of course, guys, I will be coming out with some future videos just based on this distribution and accumulation metric that we're going to be discussing today. But what I have laid out is what I believe AMC is sitting at right now. All right, much better now that you guys know exactly what I'm looking at. So of course, guys, this is the Wyckoff phases, and where I currently believe we sit is here in phase C, and we'll get to exactly why I think we're there. But anyways, what we have in this accumulation is 4 different phases. Phase A, which of course was that sell-off from $52 all the way down here to just about $38 or $36 in change. So we did have this selling climax, followed by an automatic reaction, followed by a sell test where you test this lower range slightly higher than your selling climax. And then we come down here to sell test in phase B. Now, as you guys can see, this is the lowest line on the chart, and this is really where we put the low in for AMC. Directly after hitting this low, we are sitting in what's called phase B. And phase B is, I like to think of this as no man's land, where we do have a lot of volatile action, but it's really testing the supply and the demand zones within the chart. So of course we have this lower range here and the upper range here, and it's really just figuring out, like I said before, where the supply and where the demand is based on the pricing metrics. And the way I like to think about this is, and as this theory states, is the composite man really moves the market. So the composite man is testing those said supply zones and the demand zones to see exactly where the price action is going to be and establishing these higher end ranges and the lower end ranges, as you can see in the chart here to the right hand side. So why I think we're in phase C right now, in phase C, is that LPS phase. The LPS phase in this schematic 2 chart here is slightly higher than the ST in phase B, which was established right here. And we already got that last LPS over here, which of course, guys, the charts don't have to be a 100% to the T. That's all I'm saying here. It does not have to be 100% accurate. It just has to follow the same thinking and understanding of what this entire theory states, which of course I'll dive into that later because this is just hours and hours and hours of research, charting, and just understanding of this theory. But as we came down here, and why I actually was really bullish on today was because of this double bottom we saw over here, right at that $35.90 mark. We did test that, and of course I am on the 1 hour chart on 11/26, and then again today, of course, Monday the 29th. So seeing this double bottom on that LPS really shows that we found comfort, established this lower trading range here, and literally testing this range before we start the next mark up. Now, of course, I'm not saying we're absolutely going to blast through this and go right to the moon. Absolutely not, guys. But what I do believe is going to happen is we are going to have a slight jump if we can break through this line right here, this resistance line here. If we do break through this, close for the day, I do believe it's going to be a little bit of choppy waters like we saw just about in the middle of May, where we break up here, somewhere around this area right here, retest, which of course would be that last LPS in phase D. That's of course what we're looking for before we head up to the sign of strength. And of course, I know a lot of you guys follow the BAM investor on Twitter. The SOS is similar to his ZOS, which is the zone of strength. Same exact thing, guys. And that's exactly what he has been tweeting about. So if we do get this break over here, we start to climb up, close. We're going to get one last retest of this line before really pushing up into this SOS area, the sign of strength. And that is really why I believe we're trading right here based on the schematic. And I do believe we are going to have some great price action for AMC in the very near-term future. And I know, guys, everybody and their mother has been talking about this price action, and it hasn't happened. But the reason why we've had this choppy trading action is because of the accumulation cycle that's going on. Right now, the quote-unquote composite man, as we say, is accumulating the shares, and he is trying to get the absolute best Black Friday / Cyber Monday deals on the market right now. Once he loads up his entire position, that is exactly when he is going to push to that SOS phase and then start the run-up in phase E. So, really interesting stuff. And guys, I know this is possibly a lot to handle for some of you folks. So if you do have questions, please leave some comments, because this is some really great, interesting stuff. And this schematic, last thing I'm going to say on this, is not only for just AMC or even equity markets in general. This theory can be used in the cryptos market, in the commodity market, in bonds, in Forex, you name it. This theory absolutely applies. So one last technical point to note here is this trend line that we established back here at our low at $28.91 on 8/5. I know, quite some time ago. Since then, we had a test here. Of course, first established it on 8/5, again on 8/11. We recently touched this over here on 10/28, and now we are trading right below this range here as of today, and of course on Friday of last week. So that is some really great stuff that we're following this trend line, and really tomorrow is the test to see if we're going to hold this and potentially start to reach our LPS of phase D, or if we do have another retest of this line here at $34, which I personally believe is highly, highly unlikely. So of course, guys, we'll see what tomorrow brings, and we'll break it down from there. But personally, I do think we are going to start creeping back up into this $38, $39 level before retesting back down and then shooting to our SOS phase D. So really exciting stuff, guys. I know a lot of you are going to ask, what's the time frame on this? Time frame absolutely doesn't matter. The common man, the composite man, he takes his time. This can play out for as long as it goes, because the composite man is very strategic on how he places his buy orders in the market. He wants the best possible pricing, and that's what we have to keep into consideration while going into this. So be patient and also be excited, because if this is correct, we should absolutely start to see that price action into SOS. That is your phase, and ignore why I have it so long. That's just how I had it right there. But once we do get into this SOS range right here, this is where we bounce around. We bounce around from right around $43 to $48. We bounce in this range, and then once we do break out of this range, we're absolutely exploding to the upside. In this SOS, we don't know exactly what it's going to be yet. I do believe it's going to be somewhere around that $43 range, $44 range, because that range has been such a resistance for us in the past couple of months. So that's exactly why I think that's going to be the SOS here, but we will see as we get closer to this date. Now, just bringing in a couple additional articles that I want to discuss today that kind of falls in line with the theory that we discussed today comes from this right here. So we had a giant U.S. pension fund buying AMC, Snowflake, Tilray. I know those two, absolutely irrelevant, but they're selling off Berkshire Hathaway in order to pick up some AMC. And this is really what we want to see. We want to see those large institutional buy orders start to come in around these prices, which really proves that we are in this accumulation phase right now, which is why it feels like it's taking forever for AMC to run. Totally fine, guys. The more this thing accumulates, the more higher potential I see on the upside. So of course, we'll see what happens, but this is not the first nor the last institutional fund that is hopping into AMC. As we've discussed in previous videos, we've seen lots of institutions doubling down on AMC or even just averaging up on their positions for AMC. I mean, guys, who doesn't want to see that? Now, I know a lot of you have been saying, well, they're just buying up these shares so that they can lend them out for cheap to these short hedge funds. While yes, that absolutely is a possibility, and I think it does happen, you do have to take in consideration not all of these said hedge funds are actually on that side, because we're in a very competitive market here where everyone is fighting for market capitalization here. So what we have is we have some quote unquote good investment firms and then some bad hedgies over there on the other side who are absolutely buying shares so they can lend them out to their friends so that they can live a couple extra days or weeks or months, who knows. But those good hedge funds are like, no way. We know you guys messed up. We know your short positions are way back at $2 or $3, and they absolutely would love to see them bleed and go bankrupt. I mean, that just brings more capital to their pockets, and they know they're going to make a shit ton of money on this. So that's my theory based on institutions lending out shares, some good, some bad. Now, I do want to break down the flow levels for AMC because, of course, today we did have a little bit of bearish price action. But for today's levels, and this is a minimum premium of over $1,000 for AMC, we saw the number of calls being 78% and the number of puts over here being only at 22%, which is really great to see. Now, some really interesting things, as you guys can see down here, the bulls were absolutely targeting that $38 range. And of course, the bears were targeting that 38, keeping us below $38. So really interesting stuff going on over here. And this is really the playbook that I've been using for the Wyckoff phases. Of course, there is a accumulation and distribution phases, and I'll make a separate video based on why I think we're in accumulation versus distribution phase and what's the differences between the two, how to spot certain trends and all these different phases, because this is just such interesting stuff that I truly believe everyone should have at least a basic understanding of. But guys, I know that was a short video. That's all I have for today. I do think we are going to have some good price action for tomorrow. Hopefully, early establishing of Phase D sometime this week. So it's going to be interesting. Let's see what happens. But peace out, guys. Hope you have a wonderful night. See you all tomorrow morning.